So this is the screen that you'll see when you sign on. This is the home base, and this is where if you get a little confused about where you should be, you can always go to home base right here, and that takes you right there. When you look at home base, you're really looking at two screens in a way. This section over here is on a cash basis, okay? Over on this section is the accrual basis. This is the easier way to work with. All right, so for example, here's a check register, which, let me just move this over. You can see you would pick which checking account that you want, okay, because there are numerous checking accounts. This is just a sample that QuickBooks provides. When you buy or use QuickBooks, they have a host of sample companies that you can practice on. So basically, we're going to use this, and then you can see it just looks like your regular checkbook, doesn't it? You can see where there have been expenses. Here's a payment to Midfield Nurseries. By the way, this sample company is called Larry's Landscaping and Garden Supply. But here are various expenses, and then here are various deposits that have been made. So basically, if you wanted to, you could do everything just based on the check register. So for example, the next check in this series, this is 1129, so I could go 1130, and then the payee. It gives you a pull-down menu, okay, of who's going to be paid. So maybe I need to pay a utility bill, Bay Shore Water, and the amount, the bill is say $55, okay, and then I have to tell it what account. Well, I'll go down to utilities, and there it is, the water bill. Okay, and so then I'll record that, and then you'll notice it makes that little beeping sound. It's up here. Okay, this is actually in the year 22. That's about 4 years from now. But at any rate, so there's the recordation of that expense. So this is basically what it looks like to use a very simple system. And then you have the same thing if you want to write a check. You can say, oh, I need to pay the California telephone bill. Okay, now this is great. And this gets back to this whole issue between cash and accrual. This bill, the California telephone company is already set up to be on an account payable basis. Okay, and right now they're owed $45. And why is QuickBooks having this problem? It's because it says, and let me just come out of here for a second. Rather than using the cash basis system, it says, you know, you already entered this bill as an accrual-based system. So if you're going to pay a bill that's already been entered as an accrual system through the accounts payable, then you have to use this icon here. You have to pay the bill through this system. And you see, here's the Cal telephone bill. If we don't do that, if you don't do that, then that bill will sit there, and it will sit there forever because it never got paid through the normal processing. So one of the first steps to think about is, am I on a cash basis? I'm going to use this system over here, or am I on an accrual basis? Okay. And you'll notice the flow of it. So basically, here's like, for example, if we're going to create an invoice, and then you go, okay, well, I sent out the invoice, and now I got a check. So you're tempted to go over here and record it here, aren't you, under the cash system? But you have to go ahead and record it over here on the accrual system. I received a payment. I got a check. Okay. Let's and then here, for example, if your people are just walking in your store and paying, in other words, we didn't send them an invoice, then you can give them a statement, an invoice for something they purchased. So for example, let's say I go down to the hardware store and buy a can of paint. They would give me an invoice here. They wouldn't set it up as a customer as accrual because I'm paying cash right at the counter. Let's take a look at the reports. This is one of the more powerful things about QuickBooks is its reports. The company and financial, for example, profit and loss. Why is this so important? It used to be when I started in public accounting that you could have to wait maybe a couple months to get a financial statement. But now you can get a statement right away. I mean, you could look at your income and profit anytime you want. And so, for example, and you get to choose. Here, we could look at last fiscal year and see how it does. And also, you can customize the report. So, for example, let me pull this over. I can change it to cash to accrual. Right now, we're sitting on the accrual basis, and I could change that to cash, and it would do it automatically. Okay. I can look at prior periods and see what that difference has been. So let's look and see how I did with the prior period. Isn't that fantastic? So now I can compare, and this is what's so important about management and accounting is it gives the owners, the management, a possibility to compare how they're doing with this year with last year and see what changes they need to make and help them better understand what's going on in their business. So this is just one of the reports they have. They have, and let me just say, come out of this. And they also have it, and I'll show this to you, is when you look at company and financial, they have detail, so you can look at every line item in the reports. Let's take a look at that very quickly. You can see every item that went into that one income, say, of design services. And that's very helpful if you're trying to track something. And let's take another look at some other reports here. This one is particularly interesting. This is profit and loss by class. And what does that mean? It means that the owner of the business is not simply content with having profit overall for the company, okay, over here in the totals. The owner would like to know by division, for example here, or it could be by location, but in this case, Larry has set it up by type of work. So here's design, landscaping, maintenance. So now he can see which particular type of activity is doing well and which one may need some help. And alternatively, Larry could set up the classes, and that's what this is, classes by location. So this could be Bethesda, Arlington, Merrifield, for example. So maybe he has 3 different stores in 3 different locations. He can track how each store is doing, net income and expenses. And then, of course, he can still go back and do the additional analysis of seeing how he did by in this case, by activity last year and this year. So that's one of the more powerful things about QuickBooks is the ability to get the reports out to management. Now we've looked at, and you can see there's a lot of accounts here, and you may say, how does this all work? How do we get these accounts to work? And this really goes to the chart of accounts. And let's take a look at the chart of accounts. As you can see, it's pretty expansive, isn't it? And what you may decide is either I don't need all of these accounts or I need to add an account. So for example, let's take the permits, okay? And let's say we don't need permits. Well, we can just delete that account. Okay, now there may be some activity in there, and so we have to go in and edit it first and disassociate it with overall job expenses. We're going to save and close, and then we can go ahead and it's disappeared. It's gone. To add an account, we want to a new account, and then it says, well, what kind of account is it? Is it income? Is it expense? And then you've got, is it a bank, a credit card? Then there's this other sort of generic list of other items. So here's like other expenses, cost of goods sold. Here's like other current assets. So let's say I want to add a prepaid insurance. Okay, and so right here, under other current assets, I add prepaid insurance. Now I could make it a sub-account of another account, but I'm just going to leave it the way it is. The other interesting thing, more from my perspective as an accountant, is something called tax line mapping. And that's where you can actually tell QuickBooks when the tax return is going to be prepared, what particular line item on the tax return is this expense associated with? Well, it would be a prepaid item, and that would not show on this books right now because this is set up as a sole proprietor and doesn't track it. But there would be an account here normally where I could say on the tax return, this is where this line goes on the tax return. So that can be helpful in getting your taxes done and streamlining that whole process of tax preparation. So we've set up our new account. I'll save and close this now. Okay. And I'm going to just prepaid insurance workers' comp, let's say, just to identify a little bit more. So that way you now can see how to add and close, and this can be reached right here under chart of accounts. And you'll also notice it's under list chart of accounts. So it appears in a couple different places. As a matter of fact, as you go along, they'll let you add accounts on the fly, which is helpful. We talked about the accrual and cash basis for a little bit. Let's go back and take a look at the accounts receivable. Okay. So let's say we are on an accrual basis and we want to send out an invoice. We've done the work and we want to send out a invoice to our client. So first of all, we're going to pick a client, and let's just pick Craig here. We did some work for him. Now remember how we were looking at the different categories? In other words, there was like design, landscaping. Here, we're going to allocate or show that this revenue was earned by a particular activity. It could be also by a particular location. So, for example, this could be Manassas. As a matter of fact, I could add a new class name if I wanted to. And let me see if I can pull that over. So basically, I could add a new class name and call this roofing. Okay, maybe Larry is starting to do some, or maybe let's just say grass mowing. And so basically now he has a brand new classification so that he can now track how the company is doing in this particular division. In our case, we'll just say that this is design. Okay, we earned this money in the design area. And what did we do? For example, these are the various items. These are the types of services that we provide. We did some installation work for him, okay? And it's been pre-set up that for this particular service, we charge $35. And let's see, we'll just say that we did 5 of these, okay? And you can see now that it's multiplied the quantity times the rate, and it's $175 is how much Larry owes us, or rather Craig owes us. And you can see that we've set it as a non-tax item because it's a service. We could actually set it as a taxable item. And then down here below, for example, apparently this business is in San Domingo County. The rate is 7.75%. So we'll leave it at that. You can put in if they had a purchase order, if Craig had given you a purchase order for this service, all that could be done. So now we're ready to save and close. Okay. So 2 weeks later, we are going to get a payment. Okay, we get a check. And who did we get that check from? It was from Craig. Okay, and oh, here's our invoice. Remember seeing that just a little while ago? And its check number, let's just make up a check number that Craig sent us, say it's 200. So now we're saying, yeah, we'd like to go ahead and record this. And so we save and close. Okay. Now if we go over, this is where we recorded that payment. Now what can happen is, and let's go over here and take a look at this. You see, here's the check that's just been received. And you'll notice that we've got some other items that have been received. And you say, well, how does this work? Sometimes I'll get a check today, but I won't run down to the bank and make a deposit just for one check. I may get checks all during the week, Monday through Friday, and only make my deposits on Friday. So in order to show this, I have to show the total. So here's let's say I'm going to deposit this payment and this payment on Friday. So I go, okay, so that's $592. And it's in undeposited funds, which means that this is sort of an accumulation of those two checks. And we go, yes, save and close. So now I've gone ahead, I've created the invoice, I've received the payment, and I've gone down to the bank on Friday and made my deposit. Stephanie, if you have any questions during this period of time, please let me know, okay? So we've talked about receivables. Let's talk about payables. Okay. And here, oh, I owe some money to some people, don't I? And so basically, here is the oil company. And let's say that I have a bill from them. I just got it in the mail today saying that Larry's landscaping company owes $525.13. Okay. Now here I allocate, even though I haven't written the check yet, because I'm on the accrual system, I'm going to go ahead and record this expense when I get the invoice, not when I actually end up paying it. I may not pay this invoice for another 30 days, although you can see the net terms here is I'm supposed to pay within 15 days. So now the QuickBooks software is saying, well, where do you want to allocate this expense to? So I can say this is to the oil company, probably somewhere under utilities would be the appropriate place. There's utilities right there. Yep, there, and we'll put that under gas and electric. And you can see I can also now assign it to the various classes, because remember in our example, Larry likes to know how each activity is doing so he can see whether a particular activity is making money or losing money. So I'll go ahead and you see here's the new activity that I set up earlier on. We're going to set this up to maintenance. Okay. Now you may say, well, what if only part of this bill was for gas and electric, maybe $200, okay? And the balance was for repairs. Maybe Cal Oil Company came out and made some repairs or maintenance. And let's see if we've got repairs. We do. So here's building repairs, okay? And then again, I could set it to a particular activity. Maybe I will even set it to overhead because it wasn't for that particular activity that the expense was incurred. It was more for our general corporate offices. So I'll put that to overhead. So now I've posted this bill and I'm going to save and close. And then later on, 2 weeks from now, I sit down, I go, yeah, I just got some money in from Craig and now I can pay my utility bill. And so here it is right here, and all I have is enough money to pay Cal Oil, although I could pick other people to pay in addition. Okay? So I'll pick those 3 people, and we're going to pay the selected bills. All right. And now here is the categories of items that we can pay. We're not going to pay more bills. We're ready to print checks. Okay. The first question you have to ask is, you're about ready to have pre-printed checks and you're going to feed those into your printer. So you have to know which check number you're going to start with. You have to tell the computer, oh, we're going to start with check number 1501 because that's the latest check that I have in the series. And now we're ready to go ahead and we can pick which ones we want to print the checks for. Okay, and now I can go ahead and say, okay, let's go ahead and print these checks. And now you get a screen that looks like this. All right. Then you have to tell it which kind of checks do you have. Do you have like a voucher check where it's a sheet of paper and there's just one check per sheet of paper and there's all this explanation about where it went? Is it like a wallet size where you have a little stub here and the check gets ripped off on the side, or is it a standard type of check? Okay. Then you have a chance to use your logo if you want to have print a logo on the check, and then you're ready to go ahead and print. Okay, so that gets you through the function of entering a bill. As a matter of fact, you can hear the checks printing off right now. These are just examples. So this gives you an overall idea of the receivables, creating an invoice, making a payment, recording the deposits, entering a bill, and then paying the bill, and then printing the check. The next thing that we would like to look at, there's sometimes things need to be done that aren't through these two systems, okay? And they're not really through writing a check or making a deposit. Let me give you an example. Depreciation. At the end of the year, I have to accrue depreciation on expenses or assets that I have. So in that case, I would go to Accountant, make General Journal Entry. Okay, so now here is where I get to decide a particular entry that I would like to make. And you can see this is entry A108. And let me clear this off. And you can see earlier entries. For example, here's insurance, prepaid insurance. So these are all entries where the accountant has to spend a little time making adjustments to the overall books and records. So let's go ahead. We'll make an adjusting journal entry. And we talked about doing depreciation. Let me see if it's already been set up as an account. And there it is. See? And here, if I wanted to add a new account, I wouldn't have to necessarily go to account, the chart of accounts. They'll let me add a new account right on the fly. But they've already got this account set up, depreciation. And I have, say, $1,000 of depreciation expense. And the offsetting entry is going to be to accumulated depreciation. Now here it is right here. So that is that entry. Now I can always put in a memo as to what this is about. And then again, I have this classification. So maybe this particular truck is being used by the maintenance department. So that way they get allocated the expense for the depreciation on the truck that they're using. So I'm going to save and close this. The next thing, and one of the more important things that we're going to talk about, is bank reconciliations. And I'll give you an overview here. We go to banking, and we are going to go to reconcile. And this is very important to reconcile to your bank account. Otherwise, your QuickBooks records are just untied. They're untethered to what is actually the reality, and that is what's in the bank account. So we're going to do a reconciliation. And here again, which account am I reconciling? So you have to first start out which I could have. In this case, they have 4 different bank accounts. So first of all, I have to say which one I'm reconciling. In this case, I'm not quite sure in our example exactly what the ending balance is for the month of November 2022. So, but we'll continue on just for a minute, and let me go back and I'm just going to go back just for a second because we're going to actually put in what the ending cash balance is so that you can see how this works. So we're going to go to reconciliation, and my actual ending cash balance is $110,379.86. And I got that right off of the November bank statement, didn't I? So now I'm ready to continue. Let's see here. There we go. Okay, now this is all of the activity that has been reported through QuickBooks. Well, remember, we're November 30th, aren't we? So a lot of these checks the bank doesn't know about, do they? See, they don't know about a lot of these checks. As a matter of fact, they don't know about most of these checks. So you can see that we've cleared out these deposits, and this is the items that are outstanding. Okay. It's a little difficult to give you a perfect example because some of these cleared or haven't cleared. So you can actually unmark all, okay, and clear all of them out as not being cleared, and then you can go back in and mark them as cleared. So let's go through. So for example, you can see, let's mark all, okay, and say, hey, they're all cleared. It'll take a second. But we know December hasn't cleared at all yet, have they? So we have to unmark these. And as I unmark them, you can see the detail, the differences change over here. Also on this side, since we're reconciling through November, even though I've made deposits in December, the bank doesn't know about that yet. So I have to clear those off. And now I reconcile, don't I? See how it keeps a track for me? If that number isn't zero, there's an issue. Either I haven't entered a check that the bank knows about. So think about it as communication. Here's my QuickBooks file, here's the bank. If that number isn't zero, either the bank has done something, maybe a bank service charge, or maybe there was an overdraft charge. Something has happened on the bank side that I haven't entered in QuickBooks. So I would have to go back in and maybe make an adjusting journal entry to enter that charge and then say it's been cleared. Otherwise, I need to get this down to zero. Okay. Or, for example, maybe I've written a check and said that it cleared, then it turns out when I look at the actual bank statement, oops, that particular check hadn't cleared. So when you look at a set of QuickBooks, this is one of the first things you look at is if the books are being reconciled. And believe me, it's so much nicer and easier to do this with QuickBooks than under the old method that I started out with, and that was doing it by longhand on a sheet of paper. So we're going to reconcile now because we've brought this down to zero. And it's going to take a moment, and then it's going to say, would you like a copy of these reports? I can get a summary or a detail or both. And normally I won't print it out, but mainly I would ask for a detail. And then you would take that with the bank statement and put that in a notebook. So you can say, hey, for the month of November 2022, we are reconciled and the books are correct. The other things that we can look at as far as what should be reconciled or looked at every month is the reports on receivables and payables. Remember how we looked at company and financials? We looked at the profit and loss, and we looked at the profit and loss by class. Also, you'd have a balance sheet. But now what we would like to look at is reports, and we would like to look at, say, customers and receivables. Okay, and let's take a look at the detail of the customer balance detail. And why are we looking at this? I'm looking for activity that looks very old, okay, or is a negative. Because if people owe me money, the accounts shouldn't be negative, should they? So I'm just going down every month because there could be mispostings, couldn't there? And this is a good chance or a good time to correct those mispostings rather than waiting 4 months from now when everybody's memories have kind of faded and they can't remember what the underlying transaction is. So it's always nice just to go down and take a look at the dates, see if there's anything that looks really old, okay, and whether it just looks reasonable about the overall balances that people owe us. And oftentimes what you'll find is there may be even a negative. So for example, here's Carol Corcoran, okay? This is exactly the issue where she's showing that she doesn't owe us money. Our books and records are showing that we owe her money. So when you see a negative balance in this area in the accounts receivable, that means that there's been an error. Either an invoice wasn't entered. In this case, that's probably true. In other words, she sent us the check, but for some reason, we never sent her the invoice. So there should have been an invoice right here for $500 to absorb that payment of $500. Okay? So basically, that's one thing that you want to do along with the bank reconciliation at the end of every month is to go down and look through the detail and see if there's anything that looks peculiar. And also the same thing with vendors and payables. Okay, we would like to look at the vendors balance detail and say, okay, do I really owe, well, in this case, I don't owe Bayshore anything. Here, I owe the California Gas and Electric Company some money. And so that looks pretty reasonable. So again, you're looking for stale invoices. And if I had a negative in any of these balances, I would have the same kind of an issue, okay, of why. Why do we have a negative when everything should be a positive in this report? Let's take a moment and take a look at getting your company set up, okay? So here is my company under company. And this is where we have all the contact information for Larry, his address. So if he wants to print this on his invoices, it's already listed there. You can manage your account from here and you can edit it. So let's slide over and take a look at the things that we can edit. We could change the contact information. Maybe he's moved recently. Here's the legal information. Okay, Larry Landscaping. Well, maybe it should be Larry Landscaping Inc. Okay, that's his actual legal name. So we can go, okay, that's fine. And then the company name, well, that's not his correct federal ID number. We can change the federal ID number to 56000 up to 56-0000. Okay. And that's his legal, actual legal name for his company. And so, oh, and then reporting information. Right now, our reports are being based on an October year end. Well, most companies are on a December year end. You have this option. You could actually change your tax year also to reflect that's on an October year end. But so many businesses, not only are they on a tax year that end in December, they also want their actual operations reported on a December too. Now remember when we were looking at setting up that prepaid account, prepaid insurance, which is actually an asset account, and I couldn't quite find the right category to assign it to? Well, that's because this was set up as a sole proprietor. But let's say I set this up as a C corporation or an S corp. In other words, I can set this business up according to what its actual tax, its legal status is, and what tax forms it will use. For example, with an S corp, it uses an 1120F. So let's do that. So I'm going to probably pass on that because in our example, it's saying that there's some other accounts that have already been set up and it's going to delete them. So, but anyway, this is where you can set these activities up. So we're going to cancel this, but under company information is where you would change this. Payroll tax forms. This is basically tax information, the name of the person who's preparing the tax form. So let's go on now and take a look at another interesting area, and that is preferences. And if we go over here under Edit, you can go down to Preferences. And what Preferences really does for you, it allows you to kind of modify the standard QuickBooks to adjust to things that you would like to see or have done. And let's talk about a few of those. Let's start out by taking a look at the category of accounting. Okay? And here is the company preferences. Now here is where you would turn on or turn off the use of the class tracking system. Maybe after a while Larry comes back and says, you know, I really don't need all this specificity. It's causing a lot of extra effort. Sometimes maybe it's hard for me to allocate the various expenses. So I don't want to do tracking by class anymore. In other words, I'm not going to get a report on maintenance, design, or lawn mowing anymore. I'm just going to get one P&L showing all of the activity in one P&L statement. I won't get that differentiation between activities anymore. The other area that we can look at is reports and graphs. And here you'll notice we're on an accrual basis. So all of our reports are being generated on an accrual basis. And you may say, I appreciate the accrual reports, but when I'm looking at this, I always want to look at the cash reports. I don't want to have to keep going back and changing the classification from cash or from accrual to cash. So I can just change it right here. Now, what does that mean? It means right now when I go to report and I go to company and financial, P&L, see it's an accrual basis. But if I'll go back over here to the edit to preference, to reports, and I change that to cash, then when I go to do the reports, then when I go to do the reports and get a profit and loss, now it's on a cash basis. So it's just sort of something that helps streamline what you're doing there. The other area under preferences that I'd like to show you is what your desktop looks like, okay? And this is another option for you to take and change the desktop view. And let me just go back to the home base for a second and show you what our desktop looks like right now. This is it, isn't it? So maybe you're saying, well, I don't really need payroll, okay? I don't need this particular activity shown on the reports. So what you can do is you can go to preferences, and you can change what is going to be the view of your desktop. So here I have payroll, and these icons below are turned on. And it's very easy for me just to say, I don't want to see this particular icon. Or here's time tracking. Maybe I like payroll, and not only that, I want to see time tracking. And these are other ideas that we can turn off or turn on. So here's like sales orders. Maybe I don't need sales orders, so I will just turn that off. Okay. So I'll say okay, and then once I refresh, then the sales orders will disappear. It's still there, but it will disappear once I restart the computer. The other area I want to talk about is bank feeds. Now, when we took a look at home base, you can imagine you're working at a company and you're having to enter all of these activities in a check register. It's very, very time consuming. Companies have credit cards. They may have 40 or 50 items coming through on the credit card. Or in checks, they may have 40 or 50 items coming through monthly. Having to add all this in manually is very time consuming. And as you can see, you can also end up entering the credit card information manually. So if you had a credit card bill from, say, Amex, you might have 40 or 50 items that you would have to add in here. And then, of course, that just takes more time. So QuickBooks has developed something called bank feeds. And what is that? Basically, we are going up, and it's not only banks, but also credit cards like Amex or Visa, MasterCard. Instead of entering this data manually, we're going to go up to the source, the bank, and we're going to go sign into our bank account. We're going to download the activity, most likely to the computer, and store it on your C drive, and then transfer that into QuickBooks. And this allows us to speed up this process very quickly. Why is that? Because under this system, once the QuickBooks learns, for example, that Cal Oil is always going to be assigned to a particular account, every time it sees on the download Cal Oil, it will automatically assign that expense or that activity to utilities expense. So let's take an example. Here's the bank feed. Now, if you have not set up your bank account or your credit cards to automatically download activity, then you need to set up a bank feed. Now, here is the account called Import Web. a lot of banks will not let you download directly into QuickBooks. They'll charge you for that. So instead, the banks will allow you to download to your computer, and from your computer, you have to take the extra step to bring it over to the actual software, QuickBooks. So there's a little bit of an inconvenience there, but it's mainly because some of the banks will not let you download directly. So once we've set up the bank feeds, then we're going to go to the bank feed center, okay? And as you can see, and in this example, Larry has already established links to various accounts. We've got one bank account, and we've got a credit card. It looks like another credit card, and 4 credit cards. Let's take a look at this. Let's take a look at this one first. Here is a list of transactions. So here's a list of transactions from various credit cards. And you can see that they have little check marks here already, don't they? That means that the computer has already linked up this particular payee and knows that it belongs in this particular account. So just right here alone, we've saved 4 steps of having to manually enter this data. So let's take a look at, for example, Bayshore Oil. And what we would do here when this is highlighted, and it's not fully activated, but when it's highlighted, I want to, right now it doesn't know where to put it, does it? It doesn't know Bayshore Oil belongs in utilities under this account. So I can actually set what is called, and it's a funny word, but it's called a rule. And what the rule means is it's just a ID. In other words, when you see Bayshore cow oil, or even some variation of the word. So in other words, I don't have to have all of the word Bayshore in there. I could Bayshore cow oil. I could just have cow oil. Dear computer, when you see cow oil, the rule is to assign that to the utility account, and it would do it automatically. So this is what it looks like, and right now I'm not able to set up a rule on this example, but this is where you would set the rule up. The other thing to do is, right now I'm saying, well, how many times do I have a Bayshore cow oil account come through? Maybe it was just a one-time event, rather than going through all the trouble of setting up a special rule. Because really where this works most efficiently, so for example with City Middlefield, maybe I get an invoice or I have to make a payment to them twice a month, you see, then this will automatically assign that to the correct account. So with Bayshore Oil, if it's just a one-time thing, I may just say, okay, who is the vendor, and let's see if Bayshore Oil is set up. And it's Bayshore, there it is right there. And I'm going to set this up to its correct account, which is utilities. Okay. And then again, I could set it up to classifications if I wanted to. Remember, we're going to put this to, I believe it was overhead. So now you'll see that these 4 items are automatically, they've been pre-assigned. The computer recognizes what accounts they belong to. So after I've set up the rules, I can go to my batch action and go add or approve. And normally what will happen, great, it is going to let me set up a rule. See here, if it contains Bayshore Oil, it's saying, do you really want to always send this to the utilities? And the answer is okay. So you'll notice the ones that had check marks, they've already gone off into QuickBooks. They're already in their proper accounts. Okay? So these are the ones that still need to be allocated. And so I would do the same thing. Again, if this is a one-time event, I can set this up. Here I'll set it up, say, to Wells Fargo. Maybe this is the name of the bank that's charged me. I'm going to put it to this particular account, bank service charge. So there it is. It's already been set up. And I'm going to go, okay, batch action. Let's go ahead, add or approve. And it's saying, again, do you want to set up a rule that every time we see something that says bank service charge to put it into the bank service charge account? And the answer is yes. So that way, once the computer has been told what vendor should be assigned to what account, from then on it will remember that and it will allocate to the correct expense. So let's take a look at some of these other ones that we were looking at. We're going to go back to the bank feed center. Okay, now the ones that we just looked at were a transaction list, weren't they? Let's take a look at this one. This is a credit card. Here's download. So in other words, these transactions haven't been downloaded yet, so we haven't even gotten a chance to assign them. So let's see what happens when we do the download. Yeah, the sample feed doesn't allow for downloads, this example in QuickBooks, but this is where you either download the transactions or you will bring the transactions in and be able to assign the transactions to the various categories. Transaction list. Here's another one. It just has one. Say it just has one. It already knows when it sees Mendoza Mechanical or any variation of that name, it puts it right into tools and mechanics, so you don't have to enter anything, and then you just add or approve, and it's already shifted over to that expense account. So that's bank feeds. The other area I'd like to show you is sometimes you get so confused, you're looking for something, and you say, okay, I need to find a particular item, and maybe it's an amount. I know that we paid such and such $500, so I'll say equal sign $500, and then I'll go and have the computer search for me everywhere where we've spent $500. So here is like Cal Telephone, I spent $500. So it allows me an opportunity to search either by amount or account, and that can be very helpful sometimes in researching about payments or receipts of items. At the end of the year, you're going to have to send out 1099s to customers. And what you can do with there is you can print them right off the computer. Okay? So you'll have the 1099 wizard, which will walk you through issuing out your 1099s. And then you can select or deselect people, clients, customers, or your vendors who need to receive a 1099. Next is, of course, we can talk a little bit about payroll. Let's go back to home base. And as you can see, Larry is actually processing his payroll through QuickBooks. The advantage of that is that, for example, if you were processing your payroll through ADP, yeah. So oftentimes what you have to do is it's not linked in, although you may be able to have some aid there. But if it's not directly linked in, then I have to go and make a journal entry, don't I? I have to make a journal entry. So in other words, ADP for the 2 weeks ended June 30th sends me a payroll, and let's say it shows that the gross payroll is $10,000, where I have to go to payroll expense, and here's payroll expense, and I put in $10,000, and then I have to go ahead, and it may be that ADP isn't tied into QuickBooks, but they're taking the money automatically out of your bank account, okay? So I have to enter this. This would be one of these situations where the money's gone, isn't it? They've taken out the money to pay the payroll, but QuickBooks doesn't know about it. So I have to make a journal entry. And so there would be payroll taxes for the employer's portion. So let's go down and look for payroll tax expense. I don't see it here. I'll set up a new account. Okay, I'll just call it, and I'll bring this over, and we're going to call this an expense account. I'm going to continue. Payroll taxes. Okay, let's see what happens. Okay, so the payroll taxes, the employer portion is, let's say, $765. Okay. And so ADP took out the employee's part, their $10,000. The employer had to pay $765. ADP took that out of my bank account automatically, so I have to now enter that as a disbursement out of the checking account. So that's the type of entry, whether it would be ADP or Paychecks or some other type of payroll service that isn't directly tied into the QuickBooks system. So that's one of the advantages if you run your payroll through QuickBooks. Now, it could be that ADP has an arrangement with QuickBooks to automatically update the QuickBooks, but I don't remember seeing that. So I think you may have to do an adjusting journal entry, something like the one that we're just looking at here, every 2 weeks or twice a month in order to get that activity onto the books. And again, I might have to do a little bit more detail on the payroll expense, because if I'm allocating based on classifications, well, maybe the payroll here for design was $7,500, okay, and the payroll expense for $2,500 was for maintenance, see? So I can allocate the payroll between two different activity categories, two different divisions. One was design, one was maintenance. That would be very important, wouldn't it? I mean, payroll is a big cost. You want to make sure you're allocating that to the right category.